Hey folks, Bob Desmond here at the Contrarian Trader, and welcome to Focus Stocks for the coming week. What we're going to do today is we're going to talk about the stocks that we like on the charts. We're also going to go over a few of the symbols that members submitted for me to review on video. So let's get to it. The first stock up is going to be Google. We have a daily chart up here. And yes, we've had 3 consecutive days of really strong price performance. Now, while I wouldn't necessarily go running in on Monday morning, buying the shares of Google, we're going to be looking for a pullback on the shares, possibly a bull flag formation, some sort of a continuation breakout pattern after we get a pullback to buy the shares. Now, why am I bullish on the shares of Google? It's not so much because of the daily chart. It's more so the weekly chart. And members and I are going to talk about this on the week ahead commentary. So members, stay tuned. More to come on Google. When you take a look at the volume action has been good. They've had some controversy of late with lawsuits, discrimination against women, yada, yada, yada. I think that's nonsense. The shares are shaking it off. I think the shares, in all probability, are going to move higher. Just be careful. We do have earnings coming up. The next chart up is Amazon. Now, we just shorted Amazon, and we booked profits a few days ago right down here. And now we're looking to buy the shares of Amazon, but I still don't like the daily chart. Why is that? Let's update the chart. Put some resistance levels up. All right, so here you have it. You have Amazon, which has certainly had a dead cat bounce. We anticipated that there would be a dead cat bounce, which is why we covered our shorts on Amazon, and thank goodness that we did. The shares could still move higher up to this upper band of the declining downtrend channel, which is at about $9.65 per share. Where do we close? 961.35. So not that much room between where we closed on Friday and where we know there is resistance. So for me, it's not worth the trade to go buying the shares long when the shares are in a downtrend and you only have resistance a couple of points higher. It simply just doesn't make sense. Now, what I like about the shares more so is the fact that on a weekly chart, we had a bullish key reversal on the week. And members, we're going to talk about the weekly chart and a strategy of when we would get long of Amazon on the week ahead commentary. So stay tuned for that. So Amazon, I'm liking as a long, but I think that we could hit resistance. Then we see whether or not can we consolidate sideways or bias to the downside somewhat, setting up a continuation breakout pattern. Maybe we want to see a breakout above this upper band of resistance before we ever got long of the shares. Unless, of course, we were retesting prior support levels. Now, what I will caution is that we do have a head and shoulders setup that hasn't been negated yet. We have left shoulder, head, right shoulder. We broke the neckline on that breakdown below the 950 level, and now we are dead cat bouncing back. Do we hold these gains? And the market's going to tell us probably this week whether or not we hold these gains. So members, more to come on the weekly chart. The next chart up is an extreme oversold trade. Now, for those folks who have not ever followed my videos on extreme trades, I will caution you, do not go running in on Monday morning and buying these shares just because I'm speaking bullishly about them right now. I see a setup forming. I don't think the bottom is in yet. And I'm going to go over the daily chart right now. I'm going to go over the weekly chart with members later on the week ahead commentary. But on a daily chart, we have RSI at 16.21. Very oversold. We are leaning into the 3 standard deviation Bollinger Band. In short, what does that mean? If you're not familiar, it's not supposed to be here. But you could have said that here on Wednesday, and sure enough, we even leaned further into that lower band of the Bollingers. So simply because you have that indicator getting stressed right now doesn't make it a buy, and nor does it make it a buy the fact that you have RSI down below 20 because yes, it can go lower. I've seen it before. So what we want to do is take note of RSI. Definitely a great observation. Another great observation is the fact that we're leaning into the third standard deviation Bollinger Band, but we also need to incorporate a couple of other things. One, it's price action. Where do we stand historically in terms of the shares relative to prior support and resistance? I can tell you right now, we still have some downside risk before we hit real solid support. So we're going to go over that with members on the week ahead commentary. What else am I looking for here? Volume, right? You want to make sure that the sellers are done. And if you take a look at these volume bars, I can assure you that you have a lot of institutional distribution. This is not mom and pop selling 100 shares. What does that mean? It means that if you try to go buying these shares and fighting these institutions, you're going to get burned. Don't do it to yourself. So members, more to come on SCG, Scanacorp. Groupon. This is a watch stock, and oddly enough, it was requested as a member stock chart request. So Groupon, I'm going to go over the monthly chart later, because really it's the monthly chart that I want to discuss with members and why I like it so much. On a daily chart basis, the shares are overbought. They're leaning into the third standard deviation Bollinger Band in red. You have RSI at 83.85. Can it go higher? Of course it can. No doubt about it. Yes. But from a risk to reward basis, do I want to go buying now when it's at these elevated levels? No. Not from a risk to reward perspective. I would rather wait for a pullback. And I think we're going to get a pullback fairly soon. And it's on that pullback we'll be looking for a nice continuation breakout pattern to form. And then we'll buy the breakout. Members, stay tuned. I want to talk about the monthly chart on the week ahead commentary, so stay tuned. Another member stock chart request that we have up is First Majestic Silver, AG the symbol. Right now, I am negative on anything that has to do with precious metals in the short term. Longer term, I like it. But right now, I don't like AGY, weekly chart, and this is the only chart that you need. We are in a downtrend channel. Last week we flashed a bearish key reversal on the week. Our indicators are all putting in lower highs. Volume to the downside was light last week, so that has it in its favor. Stokes are below 50. So just these observations on a weekly basis tells me that the path of least resistance remains to the downside for AG. Now, this time next week, I may get the same symbol to review, and my tune could be completely different. But what would change my opinion in such a short period of time? One of two things. One is if we pull back and retest the lower band of support. I would like the shares from a trade perspective. Where would I look for them to trade up to? The upper band of resistance, like it's done multiple times in the past. There's no reason to believe that this trend is ready to change anytime soon. Now, when is the other time I would look to buy the shares as an investment? Not necessarily a trade, but as an investment. Totally different observation I need to see. And that observation would be on a breakout above this upper band of resistance and a close there. I don't care if it's trading above it intra-week. What matters is where it trades on Friday afternoon. So that's what would get me excited about AG. Not until then. As a trade, just to recap, as a trade, a retest of the lower band of support. As an investment, a close above the upper band of resistance on a weekly basis. The next chart up I have is UCO. This is a Ultra ProShares ETF for crude oil. I don't know whether it's twice the move or 3 times the move. You need to do some research on that. Either way, very, very volatile. If you like oil, you don't want the volatility that these leveraged ETFs bring, and I get it. I happen to like the volatility. Some people don't. People have different risk tolerances. So all you need to do, buy the USO if you're bullish on oil. less volatility than UCO. That being said, do I like the setup here? This is a weekly chart. And again, why do I look at the weekly chart versus the daily chart? I want that higher level view. And this is a very similar chart to AG, right? We've been in the downtrend channel. We closed out the week near the upper band. Same thing goes here with UCO. We are in a downtrend channel. We have the shares trading right at, they hit the upper band of resistance last week and then sold off, as is expected. No shock there. It doesn't make me a bear on it, right? Would I buy it here? No way. As I mentioned with AG, what I need to see is either a pullback and a retest of support, either 1448 or 12.36. I don't think we're going to get that. I think in all probability what's going to happen here is what happened a few weeks ago. We're going to bull flag out. Watch, and I'll show you exactly what I mean. I'm going to update this chart. I'll be right back. Just keep in mind these candlesticks right here. That's going to be the focus of my new annotations. Be right back. Okay, I'm back. All right, so here we have it. The shares began to bull flag out the week of July the 31st and spent several weeks consolidating, very orderly. A lot of sellers moved in, trying to push the shares down, failed. By the end of the week, there were buyers in there bidding the shares back off the lows of the week. Very bullish stuff. Can't be ignored. Then we got the breakout here on the week of September the 5th. That was a buy signal. Then the following week, which was September the 11th, we got a retest of the breakout point. Right then and there, we closed out the week above the upper band of resistance. It was off to the races. So would I buy the shares on a retest of the support level? I would if volume was light. If I see a lot of institutional selling, no. Now, what would I prefer? A breakout above the upper band of resistance and a close there on a weekly basis. Folks, this is the 30,000 foot view of the battlefield. The 10,000 foot view is the daily chart, a lot of noise. The weekly chart, that higher level view, we filter out a lot of noise. We get a much clearer view of where the shares are probably heading in the next week to weeks. Now, just to recap here, I think we're going to get a pullback. Might we shoot higher on Monday? Sure. If the dollar drops, sure, it could happen, no doubt about it. But I think that the bias is towards a pullback on oil. That pullback is healthy. I think that the pullback can probably be bought. But before we do that, we want to have another conversation about the chart to make sure nothing else has changed, either with the charts or geopolitical events. So we would want to obviously do a refresh of what's out there that could adversely impact oil in the intermediate to longer term. So right now, I like UCO. I just wouldn't go buying it right now. Clovis Oncology. I spoke about this one last week. And I was rather bearish on it because the chart I was looking at was up to right here, the 26th of September, which was a bearish key reversal day. And I really wouldn't suggest anyone go buying a share of stock when you have a bearish key reversal day. But it had an inside day on Monday and a very strong week. And last week I mentioned that I would be a proponent of buying the shares on a close above either $77 or $78 per share. We got that. I think we're probably going to get a pullback. I think the shares can be bought next week on a pullback. You could see on Friday it had a good day, but sellers moved in at the end of the day. We may get a quick pullback. I like the biotech sector. Members, we're going to be talking about the biotechs, in particular LABU, on the week ahead commentary in a few minutes. Stay tuned for that. Very, very bullish on them. And Clovis is looking a lot better as we proceed into the trading week than where it did last week. So perhaps more to come as well on Clovis Oncology. The chart is looking good. The last chart we're going to talk about, and it's a watch stock and a member stock chart request, is KOHU. It's overbought on a weekly basis. So as an investment, I couldn't condone buying and holding the shares because each time before we've been up here at the 3 standard deviation Bollinger Band in green, like back here, here, here. We've had a nasty sell-off, and I don't want to ignore that. But the daily chart suggests that there may be opportunity for a short-term bull run higher. If you're a momentum trader and you're disciplined and you're going to use a trailing stop loss order to allow the market to take you out, I would condone the purchase of the shares on a new daily high. Now, why do I like it? If I am wary about it on a weekly chart, why do I like it on a daily chart? Okay, so fair enough. Let's update the chart and show you where my mind is at. Okay. So we broke out of a pennant formation. We have a confirmation continuation breakout on the 28th. Also, again, on Friday, the 29th. And I still think that we can get another push higher on Monday of this week. Let's go to an intraday chart, see how we're setting up. And again, folks, this is a very short-term trade. All right, so now to a 2-hour chart. You could see that we closed out fairly strong on Friday. Now, what's concerning here is the fact that we were putting in higher highs on price. In fact, we closed very close to the highs of the day, yet RSI is putting in a lower high. So a bit of a caution flag being on the track there. I think that we are a bit extended, and I wouldn't plan on holding these shares any longer than a few days if you decide to get long. Because remember, folks, you got to go back to the weekly chart and remember where we are on a macro view. We are very, very extended. Don't ignore this chart. The reason why I have these bands up here is to show me where a stock is not supposed to be, and we are right there. And it doesn't mean that it can't move higher. It can. But you need to be aware of the fact that it's very overbought on a weekly basis. It's due for a pullback. If you get a continuation move higher and you buy in as a momentum trade, you need to keep that trailing stop loss order in. Let the markets take you out. And that's it for this week, folks. If you're not currently a member, we're closed to gold and silver members. I have a bronze package coming out soon. I plan on opening up gold and silver memberships in the next several weeks. So if you're interested, enter your email address anywhere on the website, and we'll let you know when membership opens up. If you're watching this on social media, please, you know the deal. Like me, follow me. If you leave your email address on the website, we hate spam too. You will not be spammed. Everybody have a great remainder of your weekend, and I'll talk to you soon. Be well.